Good afternoon, everyone, and welcome today for the Investing Masterclass last session. I see a lot of people joining at the moment. We're just going to take 2 to 3 minutes once everybody joins, since this is going to be the last session of the week. So, I would like to thank all of you who have continued to join day on day, and all of you have worked so hard, asked a lot of questions, continue to work on demo accounts. I received a lot of requests and I have done a lot of one-on-one sessions with all of you. So thank you once again for making this a success. And I feel that today I have brought Vivian also with me. And once we start the session, me and Vivian together will try to discuss some strategies today. We'll try to discuss and understand what happened yesterday. A lot of you must have started observing some volatility in the prices of gold, in the prices of oil, in the prices of stock indices, and we are trying to understand what happened yesterday night, which has created this amount of volatility and this amount of movement in the market. So we'll just be back in 2 more minutes once everybody joins. Thank you so much for your patience. And while we wait for a few more people to join, there are questions coming in. Could we get the link of the recording of the second day video? Definitely. I think our marketing team is actively working on making these videos available and post it on our YouTube and other channels. Subscribe to the YouTube channel, and you'll be able to see a lot more content as well, which includes the recording of the last few days which we have done. And that being said, not just for the second day, even the day which we are recording today, even those recordings will be out. You can also view the previous sessions we have done in the form of investor education weeks. We have done this in a different way, but all these videos are on our YouTube channel as well. And definitely you will get the recording of all of it. And I'm sure a lot of you must have received your demo accounts as well. On which a question, the demo account and the password shared via email did not work. Any suggestions? I think if it is not working, please get another one. I think must be a technical issue. Otherwise, most of the demo accounts which have been issued must be working. I think it has been sent to everyone who had attended the session. Just ask for another demo account and you will definitely get, and I'm sure it's going to work. Just make sure that you are putting the password and the caps right, whatever you have received in the email. So with that, let's start the session today. I see there are a lot of people who have already joined, and please continue to answer more and more questions. I had two emails on the same day, both didn't work. Okay. Please, you can reach me out personally one-on-one, and I'll send you the demo account myself, and I'll make sure that that works. It happens sometimes because this time we have created demo accounts in bulk. Possibly a couple of them didn't work, but please reach me out one-on-one. I'll definitely send you an email. Vivian, how are you doing? Good afternoon. How's everything?
Hi, good afternoon, Yogesh. All good. How are you?
Great, great. I see that yesterday, congratulations for a wonderful session. Meanwhile, I'll just put my email as well if somebody wants to reach out. It's yogesh@century.ae. And yeah, just put it there. So once again, Vivian, you had a great session yesterday. I was there and understanding the technical bit of it, and this was something which was requested by a lot of attendees. They wanted to understand how the entry exit happens, what are the technical studies we use, and thanks to yesterday's session, we had some clarity. That being said, I think a lot changed in one night. After a
Yes.
session, we have seen a lot of chaos happening in the markets. For those who were either not awake around 10:30 or 11, or had to go for some work, yesterday was the Fed meeting. And Vivian, if I clearly understand, the language which the central bank of US used was more favorable in terms of cutting rates in the future, in
Yes.
spite of inflation being on the higher side, as we saw in last few economic data. We have observed that Fed was slightly soft this time when it came to interest rates. So
Yes.
does that mean that this language is positive for the stock markets, for the gold prices also?
Well, as of now, a lot of people were anticipating on what to expect in the future rate hikes, and Powell had given very dovish comment, meaning that they could be possibly looking at, in fact, three rate cuts this year itself.
Free rate cuts
Now,
this year.
yeah. So this is the projection that had been discussed yesterday, and because of this, now we see the dollar weakening, and hence which has given a boost to the gold, the safe haven in the meanwhile. So at the same time, reducing interest rates is good for corporate earnings as well. So the companies also on the shorter term with the news has started rallying, and most of the indices had closed in quite positive territory yesterday.
I think that is something which is really important, because this was something which was talked about a lot. That eventually, what is going to happen to the gold prices, to U.S. stock indices, and where Fed is actually heading to. And for those people who are asking about yesterday, a real quick understanding of what it is all about, and how Federal Reserve actually works. So yesterday, there was a meeting of Central Bank of US which talked about uh, cutting down the interest rates. Interest rates, when I speak of, these are the lending rates, the rate at which central bank would lend money to the commercial banks. And lending rates are important. Why? Because you when you borrow money, or when you take a loan from the bank, they charge you an interest rate. And when those rates are higher, it's a general tendency of the people to borrow less money, which reduces the supply of money, reduces the consumption of the people, and then bring the prices down. So in last 2 years, we have seen inflation going uh, higher than the target which was expected. And that was the reason that why central banks across the world injected a lot of cash in the economy, increased interest rates to bring inflation down. And finally, we saw some success from US, from UK, from Europe. However, US being slightly more successful than Europe. In Europe, we saw Germany dipping into recession, while US was successfully able to bring down inflation from 9% to, if when I'm not wrong, around 3.1 or 3.2%.
Yeah.
Now, this meeting was all about whether what will be the future course of interest rates, whether they are going to be cut down, whether inflation is under control. And just to give you a small idea of how this would work at a macroeconomic level, if the central bank cuts down the interest rate, the consumption and of the people, the demand for the products increases. Now, this is where it becomes really important, that how it is impacting stocks. Cutting down the interest rate means loans become cheaper. When loans become cheaper, it definitely encourages bigger companies to borrow money, expand, develop, and increase their economic activity. So that's why the stock market sees this in a very positive manner most of the time. And this is the reason that why we have seen a lot of movement in stocks yesterday. If you see gold prices, and while I speak about, I think it will be only fair that we also share the movement which has occurred in the gold prices. So if you can see right here, I'm going to just search gold versus dollar. And a lot of you have who have received your demo accounts, I'm sure you are keeping a check on it. Something which I want to bring into your attention, and I think now you understand how the candlesticks work, and this is just the price movement. I want to bring your attention to yesterday, and just have a look at this last two candles right here. This was yesterday. If you see, the price was around 2150 and it closed around 2180, and today it has gone all the way to 2200. If I reduce down the duration, look at the volatility which has been experienced in gold. So gold prices maintained the upward momentum uh, for even for today as compared to yesterday, hovering around $2,200, more than that. And it went all the way to 222 triple two. We saw, sorry, 2222. And this was earlier in the session. This entire increase, as Vivian said, it has been fueled by uh, a soft language by the central bank. They are talking about cutting down the interest rates. This has also led to a decline in the bond yields. It has also led to a decline in US dollar. And although last night the interest rates were unchanged, but then the Fed has projected at least three rate cuts this year, worth 25 basis points. Basis point means 0.25%, 0.25%, 0.25%. And they have emphasized that the recent spikes which have been in inflation, they had not altered any narrative, and they will continue to do what they have decided. And I think this is what has pushed the stock markets also. Meanwhile, we are taking the gold chart, also look at maybe should I look at US 500? I think is a better benchmark to look at the moment.
Yes, we can look at US 500.
So US 500 is a S&P 500, which is a benchmark for US stock indices. And if you see this US stock market, just going back again, reducing the duration of the chart, look at this volatility. It's been phenomenal. I think yesterday night we saw S&P 500 around 5,170, and then all the way it has gone up to 5,254. That is a phenomenal bounce. And I think at this point of time, everybody is thinking the same thing, that what's next from here? Where do we go? There's a question here: does this mean that the dollar will get more weaker as rate cuts approach nearer? I think, Vivian, this is one question. So
Yeah.
of course it feels like dollar will get more weaker, but since now everybody is here, so does that really mean that dollar is going to get more and more weaker as the rate cut approaches near? And I think a second question should be in this, that um, as and when the rate cuts actually start, would we see dollar weakening at that time, or this current news which has pushed gold already higher has a sort of discounted this movement today? Like for example, if gold has already gone up, will we see gold prices going even further higher when actual rate cuts happen, or it looks like the reaction has already been priced in?
Well, in most of the cases, Yogesh, the anticipation of the rate cuts happening and the price movement on that anticipation usually occurs and eventually gets discounted.
Okay.
And now the reality of the rate cuts happening would probably happen in the second or third quarter onwards.
Second or
So
third quarter onwards.
yes,
Okay.
more likely or more towards the third quarter onwards. But let's assume we still have 3 to 4 months time from now for the interest rate reduction to actually take in effect, right? Till then, the anticipation of this moment could probably stall. We could see the markets again giving a dip back, people, folding back on their profits. So the market will go back into a stability mode. And
Okay.
while the action actually happens,
Hmm.
depending at that point of time and the current economic state, we could probably see another rise in the price of gold. Or if the gold remains at the same elevated areas, we could probably see no more new upward movement because the movement has already been done.
It has been done. So this is something which I think it answers a lot of questions here. So of course it depends a lot on the situation, but as Vivin pointed out, that a lot of times it does happen that the reaction has already been priced in, and if there is no other news around that time, that gold prices might remain flat, as we have seen that the gold has been pushed more and more higher. And I think answer to the question has also been already answered, that when will be the first rate cut this year? As you said, it's going to be around the next 3 or 4 months. Where to check the Fed statement and how to decide Fed language is soft? I think Fed statement is available anywhere. I mean, if you search Federal Reserve and Google it and check the news, you will see that the entire statement has been recorded and put in the media. How to decide Fed language is soft? I think, Vivian, most of the time when the press conference begins, it
Mhm.
always feels like it starts with a very aggressive tone, which means they talk about that how high inflation has been, and how Fed wants to look at the data first and then decide whether to cut rates or not. So that is something which is put into an aggressive tone. But later on, as we saw in the press conference yesterday,
Yeah.
as the Fed emphasized on the fact that recent spike in inflation has still not changed any narrative of the Fed, which was decided. So I think the person who asked the question here, so the Fed language is soft. How do we know it? Is when they talk more and more about a possibility of rate cuts coming in. When they give out these situations where they say that uh, we are expecting to do multiple rate cuts or three rate cuts this year, or inflation is high, but at the same time, the economic progress has continued, the employment levels are good. So
Yeah.
this kind of positive news eventually leads into the idea that rate cuts is something which is a possibility. And of course, previous few Fed meetings have not given such a soft stance. It was a little bit more aggressive, and given the inflation data, it seemed like that rate cuts were far from what we expected. But then yesterday's meeting has kind of brought a very different narrative, and I think stock markets have also reacted positively along with the gold prices also. Um, can you please put some light on euro dollar? And when all the country leaders speak to hear those recordings, can we get a uniform, reliable source? So a lot of central bank meetings happen very openly. A lot of times, you can check Bloomberg. I think maybe in Bloomberg is CNBC or Bloomberg are two of these
Yes.
channels which are talking about. But I think there are a lot of YouTube links as well, where whenever there is a Fed speech, you can check on YouTube also. And all of these are reliable sources because these are live press conferences which are happening. And
Yeah.
as far as euro dollar is concerned, I'm sure that we have seen a lot of movement in euro dollar as well. I'm just going to open the chart and let Vivi interpret this. So this is euro versus dollar currently at 1.0914, and as you can see, the chart formation has been quite similar as we see from. So
Yes.
if you see this, I think post 6 p.m. we have seen only more and more positive momentum. We did see, I think, somewhere around today, right here, that there has been a similar, some sort of correction in
Yeah.
euro USD, but I think for a very
Yeah.
small duration, and then finally we have moved on. So for euro dollar, I think, Vivian, what do you expect next for euro dollar? Because we know that Europe is also going through a lot of stress when it comes to interest rates. They have tried to hold on to the rates for in last 3 to 4 meetings, and they have not reduced it. So
Correct.
currently, Fed reducing the interest rates and Europe still holding on to it. Do you feel that euro is going to get more stronger against dollar, or eventually euro will also cut rates, and that might make euro more weak?
See, at this point of time, Yogesh, depending on their economic state, right? We do know that the European indices specifically has been rallying, but to look at the economic state as where Europe is at this point of time, we see the European economy more on towards the recession state at this time. At this point of time, you can call it a technical recession at this point of time. 2 quarters being on the lower than anticipated.
Okay.
Now, looking at this, I think ECB has to look at cutting the rates at some point in time. So, and if they do cut those rates, then we could always see euro again retracing back down. The whole move that has happened yesterday against the euro was because of dollar. Dollar weakened, and hence euro went back up against the dollar. But overall, it is the dollar's weakness that has pushed euro back up. But now we have to keep our eye on what ECB looks to do in going into the future.
Okay, okay. I think that's fair enough. So I think the fate of euro still depends a lot on European Central Bank decides. The current stand by the Federal Reserve, the U.S. Central Bank, it has pushed dollar on slightly on the weaker side, and that's why we have seen euro rallying. But as Vivian pointed out, that the major step and the major role will be played by the European Central Bank. Germany being into recession, rates being higher since 1999, an all-time high. I think Europe is due for a rate cut, but whenever it happens, I think that will decide the fate of euro as well. Another question coming in here: the pros and cons of investing in commodities and share. So, in a very general manner, I must say, investing, when we say the current market status as we see, uh, if you talk about investing in commodities, I think you refer to a long term investment part, which, looking at a current perspective of the markets, I think we must try to refrain from putting money into commodities like gold or oil for a longer period. I think in terms of short-term trades or day trades, Vivian, these kind of instruments could be better. But for long-term investment, the stocks and bonds make a lot of sense at the moment. So, cons of investing in commodities: long-term investment in commodities can lead to a down cycle, because commodities, they always run in cycles. If you see, at one point of time, gold prices from 2012 to 2020 have been through a range. So until pandemic happened, the gold prices did not cross that range. So for a longer period of time, the money was tied up for a lot of investors who thought that gold will be a good long-term buy. So I think in commodities, you, because they're so volatile, you should always put a stop loss, manage your risk well, and try to get out of the trade as early as you can once your stop loss or take profits are hit. As far as shares are concerned, I think if you pick the right business and you pick the right company, the advantage is that you can be the part of the growth story, like happened with Amazon, or it happened with Apple or Microsoft. But sometimes the biggest disadvantage of investing in shares is that if you have a security specific risk, that company specific risk which you face, because if you've invested in a company whose balance sheets are not strong, or for example, in the pandemic, the best of the companies, they died out because of their smaller size. So I think it's all about investing in the right business, investing into companies which are quality companies where debt equity ratios are not too high. Especially in inflation, one must invest in those companies which are marginally resilient, which means that in inflation, only those companies have survived well who were able to pass on the cost of increase in the raw materials to the customers, and they maintain their profit margins. So I think the key is in investing in shares long term, especially in inflationary market, pick out the companies which are able to uh, protect their profit margins and not affect the rising cost of raw materials. So this is something which one must look at. Another question here: usually equities and gold prices are inversely related, but currently, why are they rallying up at the same time? I think, Vivian, the best answer is what central bank has said, because making giving a hint towards loans making is expensive. Sorry, loans becoming cheaper.
Make it cheaper.
uh,
Yeah.
it should definitely push stock markets up, because a lot of companies would borrow more and eventually the economic activities increase.
Correct.
Why gold prices are up? Because making interest rates cheaper is increases the supply of dollars, and that is why bring dollar down and gold prices jump. Another
Yeah.
reason also why gold prices have been jumping, I think we were having a long discussion about that, how there is a possibility that a lot of Russian investors and even central bank of Russia now has been buying more and more gold of lately, which has pushed gold prices a lot higher. So I think it looks like a very bullish pattern for gold. Even when inflation data was high, we saw a slight decline, but overall gold trend has been very bullish. Um, Another question here: when is the European rate cut decision due? I think the European Central Bank meeting will be probably next month. I think the last three
There
months.
is one on next month. Yes,
One is going to be next
in
month. I think
April. Yeah.
today was Bank of England and Swiss Bank. I think Swiss Bank has cut interest rates by
Yes.
0.5% today, while Bank of England also has shown. Another question here: why oil did not pick up yesterday? I agree that before the Fed interest rate decision happened, everything is subdued, but even till now, it has not passed yesterday's high before the rate cut, through though all other economic factors and geopolitical reasons support increase. Vivian, about oil, there's a question that why did not pick up yesterday. Although Brent oil, I have seen in last 1 week, I think when the sessions started, around 81.5 it was, has reached around 87.14. I think it's
Correct.
been already $5 to $6 high, which is not very normal for crude oil
Yeah.
prices.
Yeah,
Do
and I
you
think even WTI crossed 80 after a long time.
Yeah. So,
Yeah.
do you see a retracement happening on the charts? I'll just open this for you right here. Crude oil Brent at the moment, and I think it's 86. Must see the 4 hour chart probably at the moment. Vivian, what
Yeah.
would you prefer? I think
Yeah, I
currently.
think a 4-hour chart is a good enough indicator. Yes, the overall trend with all the geopolitical tension still surrounding the market,
Mhm.
we can see the price of crude oil being on the bullish stance.
Okay,
However, like Yogesh mentioned, in the last couple of days, there has been a significant rally already. And
correct.
that could be one of the reasons why we would not have seen a very significant rally on crude yesterday.
Mhm. But we are looking at a positive impact on the oil prices also after this news, and given how the geopolitical tensions are picking up.
Yeah, I think overall it is still on the positive trend. So at this point of time, technically you could look at getting back onto crude oil at around 84 as one of your level, and
Okay.
82 marking your second level of entry. So we could see probably crude oil also playing in between this range. Let's say between 82
Yeah.
and 88 on the higher end. So that's a good range to take advantage of.
I think this is what you're talking about right here. I'm just going to put, I think, somewhere around here. This is a
Yeah,
support and resistance at the same time, somewhere
support.
around
Yes.
84 levels, which is here, right? This is what.
Mm-hmm.
Oh, okay,
Yeah.
okay, perfect. I
Yeah.
can see it right now. I
Now
think
you can. Yeah.
this is
Correct.
the resistance and the support. Perfect, perfect. So
Yeah.
I'm just going to make a
So
channel also
it's
right here.
broken out of the channel. That's
Yeah,
right.
yeah, correct,
A
correct.
retest on 84 would be a very good entry for anyone looking to take advantage of short-term gains.
Around
But
84.
yes, yes. But like Yogesh had mentioned, when you're doing with commodities, we have to be always cautious because
Right.
commodities are very volatile by nature, and especially when you're looking at crude oil, it is influenced by a lot of different catalysts that can move the prices. It's not just the dollar, it's not just the interest rate, it's not just the demand and supply. It could have a lot of factors influencing. So hence following the technical tools to enter, but also keeping a well disciplined risk management tool in place.
Must put a stop loss, definitely. I think it goes without saying. The moment we are entering into a leveraged platform or trading with CFDs, I think stop loss is a must. Even for those traders, the best of the traders follow the discipline, and without a stop loss, we are risking a lot. And I think a proper risk reward ratio is the must, is what we have seen. Please advise, are these webinars video recordings available on YouTube? Definitely, definitely. So the videos will be available on YouTube, and you can always check them if you get some time. If you want to have a one-on-one session with us, definitely we are available, and just have to book your slot, and anytime we'll be definitely there. When you tell to invest in shares, most of the platforms sell CFDs. Any platform where we can buy actual stocks for as India for US stocks, definitely you can. So Century itself has a platform separately apart from CFDs. We specifically for the clients who wish to take the ownership of the stocks and buy actual stocks, we have a platform which is called CFC Invest or CFC Equities, and you can without taking any leverage, you can buy shares and hold on to it. There's no holding cost as such because you have the ownership of the stocks. So yeah, absolutely, it is available. And for anyone who would want to invest long term in shares at the moment, I think it's wise not to take leverage because interest rates are already higher. So if you want to save on the holding cost bit, I think a cash equity is a much better option. For other sort of strategies in day trading, the margin trading platform works well. But that being said, needs to be protected with the proper and cautious stop losses. A question here: will the Bitcoin rally affect gold? Uh, I'm, I must tell you one thing here. The Bitcoin prices were falling down a lot along with Ethereum, and I think it is all about the choice of the investor between riskier assets and less riskier assets. As central bank has talked about that how rate cuts probably are imminent over the coming year. I think once the bond yield started declining, investors would choose riskier assets to seek higher returns. And that is, I think, another reason that why Bitcoin and Ethereum since yesterday has moved around 10% higher after falling much. And as we talk about gold, whether Bitcoin rally affect gold, there is Vivian, is there any sort of connection or correlation? I think this has been asked a lot. That is Bitcoin the digital gold? Will Bitcoin rally affect the gold prices, or it's just gold doing their own thing, Bitcoin doing their own thing?
I think a good answer I would think for this would be Yogesh. Is after the pandemic now there's been a lot of liquidity that's also there in the markets, right?
Yeah.
Now we do see a lot of geopolitical tensions that has come up, a lot of things, but we still see the equity market rising. We see the gold prices are rising. Now we see also the crypto markets that is rising. So I
Okay.
think now all of this excess liquidity that is there in the market
Yeah.
is being used in all different asset classes, like you mentioned, depending on what the risk appetite each of these investors have. They've been investing, and at this point of time we see a lot of them again getting back onto the riskier asset sides, because eventually they're expecting the interest rates to come back down. So now I think these are few reasons why Bitcoin has been rallying.
Right.
And in terms of correlation between Bitcoin and gold, I do not see as much. Gold
Mhm.
is still considered to be a safe haven amongst most of the investors. Bitcoin would be an investment where a client is over ambitious and is willing to take a higher risk.
Great, absolutely. I think this definitely makes a lot of sense where gold still continues to enjoy that status of a safe haven asset. And for those investors, just to clarify, a safe haven asset means where investors would put a lot of money in times of uncertainty. And a safe haven asset is basically termed as an asset who retains its value during uncertain or unprecedented times. It though does not guarantee the risk of whether how safe it is going to be, but yes, it has been observed back in the past and on many occasions that during uncertain times like pandemics and war situations, gold prices have rallied, and this is also what we have seen back in last few years. So I think that's really great. Thank you so much for everybody's asking all these questions. And I think now the biggest question is, Vivian, the today's agenda, uh,
Mhm.
doing live trades as what we have seen in last few days. I think
Yes.
yesterday me and Vivian were having a long discussion about at this point of time what is better, to go for a speculative trade, put a stop loss there, use the charts and look at it, or go with some different kind of strategies, the ones which we try to use instead of intraday trading, or just go with a mixture of both. What do you think, Vivian, at the moment? So let's start with the charts first.
Mhm.
Which instrument would
Yep.
you feel that at the moment, if I need to place a trade, what should I be looking at?
Based on yesterday's movement after the FOMC, now we've seen of instruments that have moved. One is the gold movement. Then we saw, in fact, the treasuries also move. We have seen the S&P 500, the indices move, the equity stock equity market move. Now,
Correct.
Yogesh, you said now at this current moment, if you're looking at an investment opportunity as well as a trading opportunity, will both be available at this point of time? I would say yes. It depends on where do we want to invest and what kind of trades we want to take. So let's look at two examples. If you can open one
Yeah,
on.
just give me 1 second. I'll just open
Yeah,
the chart for both of this. Just give me one
yeah.
second. Right here. So what I'm going to do is take you to platform. So I'm looking at which instrument, Vivian?
Let's look at SPX 500.
SPX 500.
Yeah.
So for our viewers who are out there, what you can do also is, I mean, of course, while the recording of these sessions is definitely going to be there. If you have your demo accounts with you, and if it's working fine and you're able to log in, what I would request Vivian to. So I have my platform with me, and I would request Vivian to exactly tell me where to draw these charts, how to put these technical studies into the charts, and decide whether to take a trade right now or put a limit order, wait for the prices to jump in, what should be the right entry and exit. So you can have a look at it yourself, and if you have your platform logged in, you can also try to draw it yourself and see how normally a mind of a trader would work when we are looking at these prices. So Vivian, S&P 500, this is a daily chart. Would you like me to
Perfect.
reduce it, increase it to?
I would let's look at, so since S&P 500 is here right now, and I think most of you all have attended my session yesterday.
Mhm.
Few key pointers that or reminders that I would like to bring again is, yesterday we learned mainly about what is support resistance, which becomes the foundation of every technical tool that we are looking at. Support is where we are expecting the prices to bounce back up.
Mhm.
Resistance, where we feel the prices takes a hit and comes back down, right? So this can happen on a horizontal market where the markets are moving in a sideway range. A sideway range usually indicates consolidation. But now if you can look at S&P 500 on Yogesh's chart, it has been on an uptrend. Now it's
Yeah.
very easy to understand an uptrend because visually it is very obvious. But if you have to draw a channel or a trend line over here, like I mentioned, we need to connect at least 2 to 3 points from the lower end, which will signify an uptrend. Great, that looks good, Yogesh.
Looks like uptrend to
Now,
me. Yeah.
yeah. Now let's use the same uptrend and use a channel over this same particular trade. Sorry, the line,
So I'll
the
just
same
draw
points.
a channel from here.
Channel,
Okay.
yes,
Here.
and
And
it'll
I'll
show
put
you
this
the resistance, right?
somewhere
Yeah,
around here.
perfect,
Yeah.
perfect. That looks good. Yeah. Now let's go into a 4 hour chart. I think
Okay.
that will give us much more
Currently, I was
information.
looking at a daily chart, which means I'm looking at a slightly longer term perspective. But to execute a trade for today, so I'm just going to reduce down the duration and look at a recent turn of
Yes,
events here. So this is a 4 hour
yes.
chart I'm looking at.
Perfect. And I also had mentioned that we can always look at support and resistance in conjunction with other technical tools. I think let's use RSI, which we had learned yesterday.
Okay, so I go
RSI, which is the relative strength index. Let's see if it is overbought. If it's overbought, that means we could expect the prices to start dropping.
1 second.
Sure.
So I go into studies and I click on RSI, and that brings me here.
RSI. Perfect. Now, RSI, Yogesh, if you do not mind, we can
Yeah.
change the parameters from 10 to 7.
Okay, so for those who are looking at it right now, just to give you a small idea, RSI as a technical study, it gives an idea about whether an instrument is overbought or oversold. In layman understanding, as you can see, if the line goes above this ceiling territory, above 70%, the asset is told to be in a oversold category. And if it comes down, sorry, overbought category,
Overbought,
and
yes.
if it comes down below 30%, below this orange line, it is called to be a oversold category and a buy signal comes in. Now you can change the duration of this by clicking on the RSI. And for a lot of viewers over here, uh,
Mhm.
this is not something which you must know. There are always consultants and risk experts. When you're doing your day trades, everybody uses a very different form of technical studies, or sometimes basic resistance and supports just work well. So you don't have to know everything over here. There are a lot of people who are already doing this for you. So this is just because we are doing a sort of a master class. So this is just to give you in detail that how it looks and how it works. So Vivian, I'm changing this right now. What should be the length of the RSI?
7, 7.
7. Okay, and rest everything same.
Everything remains the same, yes.
Okay, so I'll just make it done.
Perfect.
Yeah.
Now, Yogesh, if you can just zoom out slightly, just so that we can see the entire channel. Perfect. This is good enough, right?
Yeah.
So, yesterday we learned every time we saw the lower end of the channel touch, and along with that, if we saw RSI being oversold. Now,
Yeah,
this
right
gives
here.
two
I think this is
indications to
bottom
buy.
line which you're
Yeah.
talking about. Yeah.
Yes, yes.
Yeah. Okay. Okay. Done.
So
Yeah.
we can see that yeah, the current cursor where you are at.
Yeah.
Now, those areas are where it touches the bottom end of the range. All right. Now, this is past history. Now, it's already done. What about the future? What is the opportunity now? So, if you can just extend a bit, Yogesh, the channel into the future.
Okay. Extend. Okay. 1 second.
Yes.
So on the left side, right, like this. Yeah.
That's right. Yeah,
Okay.
extend it
Okay.
now because we are looking at the opportunity that we want to take advantage in the future, right?
Right.
So
Right.
past is already done. So let's extend the channel as well.
Extend the channel as well. Okay. I do
Yes,
this and stretch it
perfect. Yeah,
till
perfect.
here.
That's good enough. Yeah.
Okay. Okay.
Now we understand the range. Now let's look at a good level to buy. That would be on the lower end of the channel.
Yeah. Somewhere
Uh,
around here.
that is the RSI. So if you
Yeah.
just come to the lower end of
Channel.
the channel,
Here.
yep.
Yeah.
So now you see a price around 5,130, 140 is a good level to enter,
Correct.
right?
Correct.
If RSI also has come down and has given you a oversold region, right? But for those of you who understand short selling, right? An opportunity is available for us right today where you can take a short position. All right. Now, I
Yeah.
always mentioned while we are doing technical analysis, we should be aware, or we should always have knowledge of what is happening fundamentally.
Yeah.
Now, what we discussed, what we saw yesterday was if the Fed, Jerome Powell, indicating that they're going to reduce the rates at least 3 times this year. So, because of that, the price action has already happened in the markets, and hence we see the prices move up on the above channel. So, technically, we are at resistance. So,
Okay.
we can expect the prices to start dropping back down.
Yeah.
And second signal is your RSI, which is heavily
Which is
overbought,
already here. Yeah.
right?
Yeah.
So now
Correct.
let's try and take a short position. For those of you who are still grasping what short position is, they're going to be taking a trade when
Yeah.
the market starts dropping down. You will end up gaining from it. That is known as short position. I'm sure Yogesh has covered short selling to you all. Yogesh, if you want to
Just to give you
explain. Yeah.
exactly, just to give idea, I think that there are a lot of new people over here as well. Short selling allows the investors to take advantage of the falling prices. And when I say we are going short on something, that basically means that S&P 500, for example, as Vivian said, that it is in the in the overbought category, and it feels like the prices are going to drop. So how it works is you basically borrow S&P 500 units from your broker and sell it in the market. Now, once you sell it in the market, when the price drops, you can buy it back at a cheaper price. So whatever is the price difference, it eventually gets credited to your account, and the S&P 500 which you bought it back goes back to the broker because it came from the broker's inventory. This is the mechanism to explain to you, but on a platform, all you have to do is go on your order ticket, click sell, and a short position will be created. As I said, after the first session also, a lot of you have reached me out one on one and understood how short selling works. It's not something very difficult. I think this is the most conventional form of trading right now, buying and short selling. I think short selling is one of the reasons that why a lot of people do online trading also, because they can take advantage of the falling prices as well. So once again, short selling means borrowing something from your broker, selling it in the market, and when the price drops, you buy it back, keep the price difference with you, and the commodity or the index goes back to the broker. And you can do this in stocks, you can do this in currencies, cryptocurrencies, commodities, and everything, even in indices as well, as Vivian is looking at it right now. A quick question here, Vivian, for the technicals. What is 3070 and 2080? And what is so basically the RSI band which we saw
RSI.
here,
Yeah.
the 3070. How do we
Yes.
are these the categories we name it, or what exactly it is?
So basically, RSI, like I explained in my session yesterday, is an oscillator. An
Okay.
oscillator is something that swings between 2 points, that is 0 to 100% in this case. Now, the technical tool where we expect a region to be overbought or oversold, it completely comes down to the technician's analysis. Now, there are certain technicians who look at 90% as overbought and probably 10% as oversold before they take the decision, because they want to be more cautious. They
Correct.
want the market to be extremely overbought and only then take a trade.
Okay.
Whereas a little more aggressive natured technician would want to take advantage of multiple opportunities, and hence he would look at either a 2080 or a 3070. 3070 would become more aggressive. You're getting multiple signals because every time it touches 70%, we are taking, or every time it touches 30%, you're taking a buy position. But that does not determine that from 30% the market could bounce back up. The market could still remain in a overbought or oversold territory, and hence the risk management is a very key element here.
So, Vivian, is it safe to say that if we go with a 2080 RSI, it is, I mean, I'm obviously we're into financial markets, so this factor will always be there. But is 2080 a preferred form of number to put in a RSI just for a better confirmation rather than
Yes,
7030?
yes. Always being more cautious is always the wise thing to do.
Okay.
Again, it comes down to how well you're acquainted with the markets. Which products are you looking at? If you're looking at a very highly, let's say, very highly volatile product,
Yeah.
then 80 or 90 would actually be a wiser thing to keep.
Okay.
Whereas when you're looking at a much more stabler product like S&P 500, because it's more it's a bigger basket with 500 stocks, or if you're looking at a couple of bonds which moves in a range of $2 to $3 or
Yeah.
euros, then you could still prefer to use a 70-30 range.
Okay, perfect.
Yeah.
Understood. So I think there is no right or wrong in it. It's just about
Mhm.
how aggressive or cautious you want to be. So it depends on individual risk appetite that how you're going to keep those levels. Perfect. That
That's
sounds
right.
good.
Yeah.
How to
So let
confirm? Yeah, sorry. You were saying something.
no, no, you can go ahead. Go
Yeah.
ahead.
Basically, another question here: how to confirm or take entries if this channel breaks? So I think the question is about that. Is it do we take a trade when the channel breaks on the higher side, so it will be a breakout trade, and we go for a buy, or we also have the option to short sell, as you said that when we are comparing the RSI confirms that it is in the overbought category, as far the channel also confirms that it is closer to the resistance. So I think the answer to the question, how to confirm or take entries if the channel breaks,
Mhm.
if it breaks on the upside, Vivian, we
So
there should be ideally a buy.
there are again, if it breaks on the upside, yes, it is a channel that is being broken after a very long period of time.
Hmm.
There could always be cases of false breaks as well.
Okay.
A good thumb of rule that you can always keep is, since I'm looking at a 4-hour candlestick,
Hmm.
let's say once a breakout happens, it's better to wait for that candle to close above.
Okay.
Second, the next candle should again open above the breakout level, and let's say a third candle opening again above the channel or retesting above the breakout level is
Yeah.
an ideal place to enter.
Yeah.
So that will give you a channel confirmation on a breakout.
Okay. So I think that is something which is a question for everyone, because some of them also ask that, very innocent actually, but so how do we know that if it reaches to that upper channel, it's going to come down? Is there a way that we can confirm that prices will drop down the moment it touches from the upper line, and will it or will it not? If it breaks the upper line, how do we know it's the false breakout? Is exactly what you said. Wait for the candle to grow and spend that 4 hours and see where the movement is, because this is something which has happened a lot of times, where the breakout happens but seems like a false breakout. And a lot of veteran traders, normally they look at daily candles and they wait for a 3 days closing, and that's what confirms the trend is going to be on the upper side or on the lower side, and the breakout is confirmed or not. So the key is wait and not just enter right away in a breakout, because the breakout could be a false breakout as well. And I think now I think a request has been that can you please take one trade as a demo, so we can see where to put a stop loss and how to take profit as well. So I think this is something which is really important. Vivian, can we
Yeah.
then take a short sell trade now, right, depending
Yeah.
on the
L-
channel right now?
Let's
So
do that. So there are two ways to keep the stop loss and take profit. We can close the RSI now that we've already seen the signal,
okay,
so we
should
have
I
more room.
place the trade first, or should I wait that you explain the take profit and the stop loss, or I just place
No,
the
we
trade right
can.
away?
I want to use the ATR. So once you close RSI, I think ATR will have enough room. Otherwise, it
Okay.
will just
What I'll do
become
is
too many indicators. Yeah.
I place the trade now, right?
Mm-hmm.
So this is your order ticket, for example. This is a buy window. This is a short sell window. Sell window means that now I'm expecting S&P 500 prices will fall down, and if it falls down, uh, I make money on the falling prices. This is what short selling is, taking advantage of the falling prices. Now, the question, how are you able to sell something which you don't have? You're borrowing it from your broker by selecting sell and then putting units. So let's say one unit is 5,248, the selling price. So I could go with 10 units at the moment. And the amount over here, for example, so 10 units will be around $52,000. And if I click on sell, just sold 10 units. And I'm going back to my positions to see. I think it's not, one second. Okay, let me real quick place the trade first in our platform. So demo which all of you have received, I'm going to place a trade here. So you will get familiar with how to place the trade in your accounts. So this is your order ticket. Click on sell, and I say 10 units equal to $52,000, and confirm, place my order, and it's done. So I sold 10 units of S&P 500. Now I will go back to the chart. Perfect. So again, we are here, and okay, I think more questions are coming in, but we'll answer those questions as well once we understand the stop loss and the take profit part. So, Vivian, short selling has been done on the
Yeah.
current price for the
Mm-hmm.
trade, right?
Mm-hmm.
Um, just 1 second here. Yeah, going back to the platform. Now, if I have to, okay, I'll close the RSI here now. RSI job is
Perfect.
done. And we are looking at a 4 hours. I keep the trend line in the channel still.
Yes, keep it as
Okay.
it is. Now, because we use the RSI to confirm our overbought position. Now,
Yeah,
if you look at the channel, there is slightly little more room for the markets to go up. If you
correct.
can just
I think you're talking about
visualize here. So
this gap right here.
that gap, right? So
Yeah,
now let's just look at that gap. So that's a gap of almost $25.
I
Now,
think from
there are
50 to
two
40.
ways that we can look at
Yeah,
it.
yeah.
We can wait for the $20 gap to cover and
Okay.
then take the trade, or we can take a trade right now and we
Yeah.
can change the number of units. So if you just go to trade from chart, Yogesh, on the left hand side, the three buttons. Yep.
Okay. Trade from the chart.
Yeah, so let's just look at taking a short position. Now, to keep in mind is we are looking at S&P 500 on a 4-hour chart. So
Mhm.
anyone who's looking at a 4-hour duration is
Mhm.
expecting a result or the price movement to happen anywhere between today, tomorrow, or even sometimes 3 to 4 days, or which is
Correct.
a week, right? 5 trading days.
Yeah.
Now, because we are looking at a 4-hour chart,
Mhm.
now we expect this price movement to happen in the next couple of days. Now let's go to ATR, which shows us how many dollars can S&P 500 move every 4 hours.
Okay.
So
So the ATR basically shows that what is the average range in the
yeah,
4 hours time, how much it can move. Okay. So I go
correct.
on studies, I click on ATR.
Hmm.
This is what it shows at the moment. This is
Yeah.
ATR right here.
So
Okay.
ATR tells me that the
It's
S&P 500,
16.7.
correct.
Yeah.
On an average, it can move roughly as of now about $16, right?
Okay.
Now,
Yeah.
like I said, we are also looking at how much an ATR can move, as in how much it can move in a 2 day, in a date's time frame as well as a week. So let's
Yeah.
just go to daily.
Okay, so I'm going to switch. So for all the viewers over here, what Vivian is talking about is ATR is something which is called average true range, and average true range allows the trader to see that what is the average movement index or a commodity can give. So if ATR says $16 in a 4 hours chart, which means, Vivian, if I'm correct, please correct me if I'm wrong. In a 4 hours duration,
Mhm.
S&P 500 is capable of moving around $16 up and down. Is it right?
That's correct.
Okay.
Either direction, it does not give us a direction, but it tells us how much of movement we can expect
I can
in
expect.
a four
Okay.
hour. Yeah,
Okay. So when I switch this from 4 hours to one day, I will see the ATR changing almost to $51.
that's correct.
So in a day, S&P 500 is capable of moving around 50 to $51.
That's correct.
Okay. And you
And
asked
let's just look at a weekly as well,
me
just
also.
to get a. It's always best to know how many dollars
In
of
move.
movement we can see
Okay. So
on
in a
each time frame. Yeah,
like a week, I can see somewhere around $117.
perfect. Right
Okay.
now, going back to our 4-hour chart.
Okay. 4 hours right here.
Right
So in a
now,
week, it moves 170. It is expected to move around $117. In
that's
a
correct.
day, it could move around $50. In four
Correct.
hours, it could move around $15 to $16, up or down either way.
That's correct.
Okay.
Now, if we can go to order ticket and keep a stop loss of $50 down and $100 take profit.
Okay, just 1 second. So, for example, now here, so let's say I would just draw this in the chart right here.
You can draw it. That's
And
fine.
say, okay, I'll just draw. Okay. So you're saying from here, I would put a stop loss. How much? $50
Of
down.
$50 stop loss. We are taking a short position. So our stop
Yeah.
loss will be at 5,305 or 300. Yes.
5,305. So let's say I
Yeah.
go here and I put this pink is my stop loss right here. I'll
Stop
just
loss.
zoom in.
And now,
Everybody can.
as per the ATR, in a week, we can expect it to move about $100. So either you double your ATR on your current 1 day chart, which is about
Yeah.
roughly $100 again. So we keep a take profit of $100 lower, that is at 5,000, let's say 150.
So take profit of $100. So I select here. Okay. So this is 50 to 50. So I say 5150.
That's correct.
Somewhere around 5130, 49 here. Somewhere around this.
Perfect. Now, if
Wait,
we
I'll
look
just,
at, yes, that's good, Yogesh. Now, if we look at this particular trade,
yeah.
we used ATR. We did not go in random calculation of where to keep a stop loss and where to keep a take profit. We used
Correct.
the statistical tool that was provided by the market movement itself,
Yeah.
right? That still aligns well within the channel. So now
Uh,
you have not kept
Even I
the
would,
unrealistic take profit.
yeah, Vivin, sorry, I would just stop you once. I think somebody just wrote no voice. Are we audible, guys? If I think it maybe it's just one person or we are not audible. Just let me check, guys. If please write yes or okay or if you can hear us properly. Okay, okay. I think it's for those people. I think okay. I think one or two people they can't hear, but most of you can hear. Okay, most of them. Yeah, Vivin, please continue. So sorry.
That's fine.
Yeah,
So Yogesh, like I was saying, now using the statistical mode. So what is technical analysis? Use the statistics that is provided by historical price movement of the charts, right? Now, for me to completely eliminate taking any kind of emotional trade or any trade that lacks any logic or basis,
yeah,
now this technical tool has solved all my queries, right? Now I identified a trade, basically a channel resistance. So I know I can take a short here. My RSI gave me a double signal being overbought. So we can expect the price to drop. Again, historically, if you look at the prices going back on every channel top, you
yeah.
see the RSI has been overbought and you've seen this pattern repeating, right? So now that also gives you a third confirmation why this is a good resistance.
Okay.
Now coming to keeping the stop loss and take profit, we again used a statistical tool, the ATR,
ATR.
which showed us on a daily, on a 4 hour, on a daily and a weekly how much we can expect the prices to move. So
Yeah.
using those statistics, you have placed your stop loss and your take profit. And if you look at it visually, your stop loss is not unrealistically far away or unrealistically very close by where it could trigger and you come out of the trade. At the
So
same
Vivin,
time, take profit also becomes very statistically reasonable to keep based on the ATR.
okay. So when we say about S&P 500 and on a daily basis, we see
Mhm.
like the ATR which you said over a week, it showed around $100 of movement.
Correct.
So the question is it uh, if we are doing a day trade and
Hmm.
we are looking at a weekly ATR to keep
Hmm.
a take profit, will this much movement is expected from S&P 500 that
If
$100 of take profit can be achieved in 2 days or 3 days, or this is something which is basically will take a whole week to reach here, or this is something which can happen in day or 2 days also.
Okay, so Yogesh, in this case, let's say because we are looking at a 4 hour chart, hence
Hmm.
we are looking at a longer time frame. If
Okay.
you're looking at an intraday trade, then
Yeah.
we'll be looking at a trade on 30 minutes chart.
Okay.
Because
So this is,
anything,
yeah, yeah. This is
yeah,
very important. So for all the viewers who are looking at this chart, this is a slightly longer term trade.
yeah,
To make it shorter term, instead of looking at a 4 hours chart, I would look at a 30 minutes chart,
yeah,
and I have to put a stop loss or take profit for today, Vivian. And if I was looking at ATR, it would
hmm,
mostly be on the basis of the daily range, how it moves in one day rather than a week.
that's correct.
Perfect.
Correct.
Perfect.
But
Yeah.
let's say if we want to look at a daily trade,
Yeah.
we can look at another instrument. Let's look at Nasdaq, maybe 30
This
minutes
is
chart.
nice. Perfect.
Yeah,
So I'll just keep this one here, and let me put this here, nice and small. And I'm gonna go Nasdaq. Right here. Okay, so I'm gonna select 30 minutes now for
a
a
30-minute
shorter
trade.
time
Yeah,
period. Yeah.
perfect,
Okay. So now this is a 30 minutes chart we are looking at. I'm just going to
perfect.
zoom out a bit here just for your clear understanding. So I'm looking at since 14th March till last 1 week of price movement, but every 30 minutes candle. Is it right?
That's correct.
Okay.
Now, Yogesh, now let's look at on a 30-minute what can we expect and in what time frame. First,
Okay.
we are looking at a 30-minute chart because we want to take advantage of the next 1 hour, 2 hour, or next 4 hours worth of move. In
Correct.
certain cases, maybe next 8 hours, less likely, but any result on a 30-minute chart could be seen within the next 30 minutes to, let's say, next 4 hours.
Okay.
Now we have identified that the 30-minute chart has moved. Let's look at the technicals on this. Let's go to a line chart and see if we can find any patterns. We learned a lot of patterns yesterday.
Okay. So I go with, let's say, a line chart over here.
Let's zoom into the, because on a 30-minute we are looking at last couple of hours movement only.
Okay. So
We
I'll
would
zoom
not. Yeah, yeah, perfect.
in a second. Yeah.
Now on a 30-minute we can see there's a double top that is being formed, right?
Wait, help me find the
So
double top over here. So let me just show you 1 second. Tell me, Vivian, and for those, while I also learn from Vivian that where is this double top, if you guys have your platforms, you can also check where is the double top and try to. First of all, a lot of questions are coming in, guys. Just hang on till the end of the session, and once we finish this, we are definitely going to answer all the questions and try to do it. There was one question here: why don't we check the same? For S&P 500. So we have taken one trade in S&P. We're just let's try to do it in Nasdaq on a shorter duration. But I think
but
if you want S&P,
it's
we'll
a
do
it's
S&P.
a it's actually a good question, Yogesh.
Yeah.
So why
Why
don't
we are
we
not
do
doing
the
the
same
same in?
for Nasdaq versus S&P? A very good question.
Hmm.
Reason being, S&P in 4 hours moves only $20, whereas Nasdaq in $4 could move even $100.
In
So
four
now when
hours,
you're,
it can move
yeah,
$100.
yeah.
Okay.
So now when
Fine.
you're trying to take a short-term trade, you want something that gives you good movement where you can take advantage of it,
Yeah.
than going to something that moves much more slower. So that's why we shifted to Nasdaq. But yeah, good question again.
Okay. Perfect. So the movement reason we are doing Nasdaq is it's slightly more volatile because the denomination is higher, while S&P
Correct.
500 the denomination is smaller, so the volatility is less. Okay. Perfect.
Yes.
So here what we do is, so I get back to Nasdaq. Yeah. Now please
Okay.
help me out in finding this double top which we have been talking about. So
So
I'll
basically, double top, I think, is a very self-explanatory thing. I think most of us can see it, visually. The two tops that has been made.
so a double top here. Uh, Let me just draw this out. Vivian, is this something which I can draw using the draw tools?
We can use the tools to draw it, but right now we'll just look at the current double top,
One
not the
second.
historic, because we are trying to take advantage of the current market movement.
Okay, the current double top. Let's say I'll try to make this. Okay, this is Fibonacci. This is here. Okay, I'm just going to use this wave option to
Perfect.
use it. Okay, so tell me where exactly I should make it. This is one top. Can you see my cursor right here?
If you can just go back to candlestick, Yogesh.
Candlestick. Okay, one
Yeah,
second. So I go on candlestick.
perfect.
Yeah.
Now you'll see two tops that has been made.
So this is one.
Right. Yes,
Okay. So
that
this
is
is
the first
one.
top, and the second one is just forming.
Okay. So one second. Let me check. Talking about this one.
That's correct.
Okay. So
Right.
here and then so this is double top right here. One top is this and one top is this.
That's right.
Sorry.
So now
Just,
on a double top formation that we've learned that once a market rallies
mhm.
and once it makes a double top, there is a good chances of the markets reversing back down. Now again, we can apply RSI on this.
Okay. So I go back to the technicals here and I select studies and go to RSI. Right. And do you want me to change RSI or keep it as it is?
No, we can keep it as it is. That's fine. So on the RSI, we can see it has been heavily overbought. Even the second time it came back to the double top, it has been overbought.
Hmm.
So now you have double confirmation in terms of double top as well as RSI being overbought, right?
Yeah, Vivin, just give me one
Yeah.
second.
Sure, sure, not a problem.
Just give me 1 minute, yeah? Okay, yeah, I'm back. So you're
Sure.
saying here, yeah, so when we're looking at RSI, sorry, you just said,
So now on the double top formation,
okay,
again, what is the technical tool over here is the double top, right? We've seen a
correct.
technical pattern of
This is
double
the
top.
pattern, yeah, yeah,
As per the double top formation, we can expect the prices to start dropping back down. Now,
okay,
for me to get a second confirmation on this, we are looking at the RSI to
which is
see
right,
even if RSI has been overbought both the
yeah,
times.
yeah.
And in this case, both the times we see RSI is at overbought. So now I got my second confirmation. Now
So
this
this is the
is
one, Vivian, this RSI is the one which is on. So the first top for everybody right here who's listening to us, the first top which we saw, sorry, the first top which we saw in the overbought category is at 87, above 80. But the
mhm.
second top which we see, which looks like over bought at the moment, is at 70. So is this something which should it match, or is it okay to have one top at 80, one top at 70? I think a very layman question over here, but I think a lot of
Mm,
people have.
but yeah, that's a good question, Yogesh. But again, it does not necessarily have to match because if everything has to align at the same price, then it becomes very obvious to every investor and it will no longer work,
Yeah.
right?
Correct.
So usually what happens is the first time when it was heavily overbought, that is where you see buyers getting exhausted, right?
Okay.
Second time when it pulls back up, it has come back again to a overbought position, but you
Hmm.
see a seller taking dominance over here. So
Yeah.
hence you're not finding that strength in the market, right?
Correct.
So now this is giving you a good understanding that again there could be a good possibility that the market will start coming back down on a correction. Now
Okay.
we are looking at a shorter time frame. We are not looking at next 1 week, not next 2 days. We
Okay.
want to know in the next 30 minutes to maximum next 2 to 3 hours what is going to happen.
Very small
And
intraday. Yeah. Definitely. Definitely.
exactly. Yeah.
Okay.
So now let's go to keeping our take profit and stop loss on this. Again, the same exercise. Let's look at once we identify the signal. Now we
Yeah.
identify how much of profit and loss we should keep.
So here also exactly. So let's say this is a short sell right here, and expected that Nasdaq will drop. So here, if I want to put a stop loss and take profit, now should I close this and open ATR over here as well?
Yes,
Okay, so I close RSI, I go to ATR, and now in ATR on 30 minutes it shows $24.
that's good. So on SPX for 4 hours it was showing 34 $20, right?
Correct.
So now here we are getting a $34 move
In
within
30
30
minutes.
minutes. That's a very good opportunity.
Correct. Absolutely
Yep.
right. So if I have to put a stop loss over here,
Mm-hmm.
I
So let's
so
look at two more duration. One is 30. We are taking a trade on 30 minutes.
correct.
Let's look at how many dollars it can move in the next 1 hour.
Okay, in 1 hour, so I select 1 hour, and it
So that's
shows,
about $40.
yeah, 36. 36 to 40.
correct?
Yeah.
But if you look at when it's swinging high, it's between 36 to 48, 56. So let's take the mean of 48 or 50.
Okay. So you want me to change the duration?
Now we'll look at the duration of 4 hours.
4 hours. Okay. So I go for 4 hours, and it shows
Right?
around 86.
It is 86 as of now, right?
Okay.
As of this minute. But we have to look at the average also. If you look at the past, what
Okay.
has the average range been? So you
So I
can see
think,
it's between, yeah,
yeah. So I think if I were to like just draw this out,
you can draw a line. Yes. Yeah.
average movement somewhere around uh, this, somewhere around here,
Perfect. Yeah, I think
this
that's good. Yeah.
around 92, 90 or 92 or something.
Perfect. So now we know on 4 hours it moves about almost 90 to $100.
Correct.
Let's say on 1 hour it moves about 40 to $50. So
Correct.
a stop loss and take profit is very well defined. $50 stop loss, $100 take profit.
Okay. fifty
Right?
dollars stop loss and $100 take profit.
That's
Okay.
correct.
So here, if I were to put a stop loss, just
Mm-hmm.
to make a line over here. So $50 stop loss is 414. So 464 uh,
464. Yes, perfect.
around here
Mm-hmm.
be my stop loss, and then to put a take profit right here, $100 take profit. You said 420, so
So it'll be 320.
around, okay, 18 somewhere around here. Okay,
Yeah,
this
perfect.
okay. So
Now again, it just became a very simplified decision making tool
yeah,
without making it too complex, without getting a lot of emotions involved with it.
correct, correct. And I
So,
think
yeah,
because this has been a very, I think we've been a lot of people must have asked you also, because I also face this question that a lot of
mhm,
clients say that it hits my stop loss and goes back. So,
yeah,
and that is the reason that why people they resist the stop loss. They don't put it, but we need to understand that stop loss is one of the most important features, and you must, under all circumstances, keep a stop loss to protect your portfolio and day trades. So, one question being here, uh, somebody asked here, when you talk about the double or triple tops or bottom patterns, they need to be uh, historical, as you just pointed out, that do we need to see a historical triple top, or does it has any relevance, or the one which is forming right now, as you just pointed out that this is the top which has been forming? How should I make this? Should I What is the use if I make it on the existing chart? Historically, does it signifies anything, or I must make and identify a new double top or a triple top and just catch it while it is in the making?
right. So good question again. Now, if you look at it historically, every time you see a double top or a triple top or a double bottom, now this is so why do these patterns occur? This is behavioral psychology, right? Demand supply, where the buyers want to buy, where the sellers want to sell. Now, these are the same levels the entire world is looking at. So,
Yeah.
every support and resistance, it's actually a psychological level, right? Everyone is willing to buy a product when it comes down by 20% discount, right?
Right.
That's why we have sales in the supermarket or when you go to a shopping mall. When do everyone go shopping? When there's a discount. So,
Correct.
that becomes your support.
Correct.
And when do people stop buying? When the prices rise higher.
Correct.
So then there is a willingness of me wanting to pay extra, but to a certain level. I am not willing to pay beyond that. Then you will see
Correct.
the again the prices coming back down. Just to
Correct.
put that analogy in your mind. Now,
Mm.
in terms of double top, triple top, you look at historical, see how the patterns has worked out historically. Some may have worked, some may have also failed. Now you
Okay.
can do analysis on all the double bottoms that has formed till today to see how many actually went through
That's
and how many,
actually worked.
yeah. So
Right.
you can
Right.
do a back test on that.
Yeah.
But most importantly, even if 50 failed and 50 worked out, or
Yeah.
let's say if 70 failed and 30 worked out,
Yeah.
if there is no risk management, then everything is a loss.
Okay.
But let's say if there is a risk management, 70, let's say you have 10 trades, five, we keep a stop loss of $100 on every trade and a take profit of $200 on every trade. Five trades go against me, I lose $500. Five trades go in my favor, I still make $1,000. So net, I'm still on $500 profit. Let's say eight trades goes against me, I'm losing $800. And let's say two trades goes in my favor, I make $400. Still, my loss is limited. So
Yeah.
it comes down to the risk management, yes, but it's always better to go back to historical patterns to learn how the psychology of investments have been and use that to take decisions today.
And I think it's also basically a game of volumes, right? You pick out every technical indicator and you follow that. And entry exits need to be. So I think one valuable lesson which all of us have understood here is entry exits need to be planned. Like this is not something which you get up in the morning and say, okay, I want to place a trade. I see an instrument and I take a trade. I think it's always good to increase the probability that your trade might end positive. You must plan your entry and exits, look at the technical indicators, put your stop loss and take profits, and try to manage your emotions well that you don't interfere in the middle of the stop loss and take profit. So I think that is something which all of us must try to understand. Uh, so I think we've been in last 15 minutes now. So we understood a lot about day trades over here, and I think before everybody starts leaving, I think this is the end of the week. This is the end of the session. Last 15 minutes, I would just like to bring everybody's attention. What Vivian just told about was how we are doing the day trades. There could be numerous technical studies or patterns. It's just
Mhm.
what you pick and how you do. But I would still like to bring this to your attention that to be a trader or to be an investor, it's not necessary that you must know it all, because this is something which a lot of time creates a lot of confusion that do I need to have a certificate to trade, or do I need a certificate, or do I need to be a financial analyst to invest? Not entirely true. There are consultants, there are risk managers, and sometimes you tracking the prices of something every day makes or creates that range in your head. Like if you are tracking the prices of Nasdaq or gold or Dow Jones every day, you would know that when a breakout has happened. So I think technicals could be a good use to identify your risk and rewards. While that being said, a basic information about technicals is enough. More complex you get, and I think it's up to every trader or every investor that how much they want to dive in. This is something which is endless. I'm sure there are more than 200 technical studies and more than 50 candlestick patterns which are there to analyze. So, a very good session, Vivian. Thank you so much for sharing these insights with us yesterday and today. Something on the other part, real quick. This is one way how you place a trade. Another way is in a strategic form. And before we depart, I'll just leave you with one strategy which we have been uh, uh, working on, which is called a BTST, or buy today, sell tomorrow. And this has been working on with Hong Kong index. As we all know, Hong Kong 50 is the Chinese, the index which gives you exposure in Chinese companies, and this is something which a lot of foreign investors would also trade in. China had a rough last 2 years or 3 years, I must say. Even during while the entire world was open, China was still under quarantine. And finally, when the markets reopened, we saw China going through a real estate crisis. The real estate prices were down. Their company Evergrande closer to the bankruptcy. The internet companies, the tech companies have fallen down because of higher regulations. But in 2024, things tend to be changing for China in fundamental ways. The Chinese central bank had continued to inject more and more stimulus. They have tried to restructure the real estate market. The down payments have become easier. They are inviting more and more investors to come and buy real estate. They have reduced the tech regulations on the tech companies in China, which have shown some strength in the tech stocks as well. BTST strategy is done to take advantage of the gap up openings or the gap down openings on these indices. Just to give you a very quick idea, a gap up opening is something when the stock markets open, there are certain indices like Italian, Hong Kong, Germany for that matter, some and India 50 also. Some of these indices they have a history of opening at a gap than their closing price. Not something which happens always, but a lot of times there are few of these indices which always sometimes open at a gap on the higher side, sometimes the gap is on the downside. To take advantage of those gap ups and gap downs, you must uh, enter into a trade when the volumes are not too high, when the market movement is very less, and that mostly happens when the markets are closer to the end of the day. So you must enter then. and you immediately should close your trade once the market opens the next day. So for Hong Kong, this happens by the end of the day, 11 p.m. Dubai time, and the next morning when the markets open around 5:15, the closing of the trade must happen. Now the idea is that why we are doing this BTST and what is the idea behind it. Really quickly, here to tell you and just tell you the strategy that how it has been working. Hong Kong 50 or Hong Kong index is has been coming down from 33,000. It is almost around 16,800. Just to show you on the chart as well, uh, this is Hong Kong 50 right here, and this is a chart of Hong Kong. Just to give you a slightly look at this is in the last few years. This has been around 2022. In last 2 years, if you see, I've never seen a downtrend more beautiful than this. Look at this. This has been, I think, we've been a classic information, a classic downtrend as we know it, like
Yep.
textbook downtrend as we see right here. And if we see this downtrend slightly is struggling, the breakout is struggling as of now. And from its peak, if you see, of 33,000 Hong Kong dollars, it is down all the way to 16,000. So almost at a 50% discount, this particular index has been. And currently we are looking at how to do day trades in Hong Kong index. Of course, a longer term position can also be taken given the certain discount, but again, the risk and reward to that is absolutely different. You must consult your risk managers before you get into that trade. And as of now, how the strategy would work, let me real quick share with you the strategy here, so you might as well, when I am telling you, you can read it as well from your own. And this is going to be the last thing which we are going to be discussing today. So just stick on to over here, right here. Okay. So understanding the BTST, first of all, most important part, BTST means buy today, sell tomorrow, and STBT means sell today, buy tomorrow. The premises of the trading, prime premises of the strategy is that you buy by the end of the trading day and you sell the next day when the markets open, and that should be exactly the second or the minute the market opens, and not less than that. And you must buy just before the market closes. This is the premises of the BTST strategy. Now what we have done is we have done a lot of back testing in last 1 year for the strategy. And what we have realized is that when Hong Kong is being traded in different market sessions, so first is the Asian session, which is the Tokyo session, which happens in the morning. Second, as you see in this particular flyer, look at this. So there are three sessions which we are looking at where the Hong Kong trades. One is the Tokyo session, which is 5 in the morning to 1 p.m. Dubai time. Second is the London session, which is from 1 p.m. to 5 p.m. And third is the New York session, which is 5 p.m. to 11 p.m. Hong Kong is being monitored in all these three sessions, but most important is the London session, because we did a back testing and we identified, and I'm just going to quickly take you over this, that we saw that when London session is positive, and if you, whenever Hong Kong prices in the London session for 4 hours, which is 1 to 5, when London is positive for Hong Kong during 1 to 5 o'clock, when Hong Kong is seen in a territory, if you get into a BTST, like for example, you track the movement of Hong Kong index between 1 to 5 p.m. And if those 4 hours are positive for Hong Kong index, wait and only place your trades around 11 p.m. when Hong Kong is about to close. So you buy today, and next morning when the market opens at 5:15, you sell it, which is called buy today and sell tomorrow, BTST. And if you do BTST every single time, if you had done BTST every single time in last 8 months, when the price of Hong Kong in London session between 1 to 5 was positive, there is a 58% hit ratio that the trades go right. Go right means that if you bought today, sold tomorrow, you possibly ended up in profit 58% of the time. And whenever London session is negative, which means when Hong Kong prices ends negative during the London session between 1 to 5 p.m., we saw that if you did STBT, which means you short sell it today at 11 p.m. and bought it back tomorrow, and speculated on the falling of the prices, anticipated the fall of the prices, you would have ended up in the profit 69% of the times. As we must tell you, the strategy has its own risk. As we can see, the hit ratios of these strategies are 58%, 69%. And we must know that this is just another way to do trading. This is not something which is a sure shot. Please, any of the things which we have talked about here, this must be very clear that these are just different ways how you can place your trades in your portfolio. One is what Vivian told you, using the charts. Second is these kind of strategies which are back tested years over years and sometimes over months, to see that if one particular index ends positive in one particular session, and how, so is it something which is, so what is happening here, we are observing that when Hong Kong prices ends positive during the London session between 1 to 5, next morning the Asian session for Hong Kong is positive, and that has been observed 58% of the times. And rest the vice versa, when we have seen the Hong Kong price going negative during 1 to 5 during the London session, next morning 69% of the chance that Hong Kong ends negative as the market opens. So this is what is called a BTST and STBT strategy. To understand more about this, again guys, as I said, not trying to confuse anyone over here, this is just some of the strategies which we do. Please reach out one on one to us and we'll definitely sit with you and understand more, and help you place a trade as well. One question here before we go: how do we backtest any strategy on live platform? Well, backtesting is done using a lot of data, and a lot of this data is not generally available on Google or otherwise. That's where Century Financial specializes in. We have a team of consultants and researchers who are specialized in backtesting a lot of information, creating a lot of strategies, and this is the value addition which we provide to the clients. We are using a lot of different uh, subscribers and softwares which help us to get more and more exhausting data, and then that data is being analyzed by the in-house research team, and the strategy is created on the basis of that. So that is something which we do on our own. Here, suppose you made a purchase in the market earlier this day, and overnight significant news emerged causing the Hong Kong market to open the next day with a gap down at a lower price. In this scenario, would your stop loss order have been triggered by the gap down in Hong Kong, or would it remain untouched? Very good question. So when market opens at a gap, if it is a gap down and if your stop loss was put between the closing price and the gap, definitely the price at which it opens will take the stop loss. So that is the risk which is always there with the gap ups and the gap downs. And that is why it is always assured that your quantities should, this is always suggested that your quantities should always be on the lower side. Day trading is not for people who fall into fear or greed. This is something which you follow with a discipline, as Vivian pointed out, putting in stop losses, take profits. And this can be a diversified way to do this. While some of your trades can carry charts and strategies, what Vivian suggested, some of your trades can be based on this exhaustive data, which we have analyzed and backtested, and you can always try it out in different ways. So there are different strategies which are tried out, and this is just for your short term investments. You want to go long term, there are different ways to invest in the longer term, in bonds, in stocks, in different kinds of stocks, and that's where Century would always be available to help you. Question here: one-on-one session will be online or face to face? We are based in Emaar Square in Dubai. Vivian is in Abu Dhabi, in handling our Abu Dhabi office. If you're in Abu Dhabi, Vivian will definitely help you out and will be there. If you're in Dubai, I'm definitely available. You can come to our offices, or we are definitely available one-on-one online as well. As we know that the the way to meet, popular way to meet is Zoom at the moment. So I think if you want to be connected online, we can definitely do an online meeting. But we are available in our offices as well. At this point of time, post iftar as well, if you are available, we can definitely reach you out and meet you. Office is open, and as US markets are open, so we are definitely working throughout, so we can connect. I think once again, thank you to all you 200, 300 people who have continued to join day one, day two, day three, and finally day four. This has been a wonderful journey. Thank you, Vivian, for choosing out. One question over here, minimum investment. I think this definitely depends on you, how much minimum you want to invest. There are a lot of asset classes. I normally talk about portfolios in long term and short term divisions. I think every time you come up with some money to day trade, you should definitely keep in mind that you have to keep some money for your long term trades, for your bonds and for your stocks. So I normally believe in power of a portfolio and portfolio building, which could include your SIPs, which could include your ladder portfolios, which could include your stocks and bonds as well. And then some money into strategies, some money into day trades. So it depends. I mean, how much you are willing to invest in. And again, a risk reward formation also comes in over here. So this is something which we can always talk about, guys. Minimum investment. Or what amount you must invest. I think the most important part is first to understand the risk and reward very clearly. We couldn't highlight more that how much important it is to protect your portfolio and diversify and invest into different avenues to make sure that you get the best possible return out of your investments. So that being said, once again, Vivian, thank you so much for being here, and thank you so much for enlightening us with the technicals yesterday and today. And I think
Thank you.
answered all the questions which our viewers had, and I think this is something which is beginning of something really wonderful. And for all those that how often we do these sessions, normally we do a lot of weekly webinars, but since this was Ramzan, it was a month of giving, and this is just information sharing and knowledge, so we decided to extend this for 4 days. We will definitely be back with sessions like this, but till then, week on week, we'll continue to do a lot of webinars on different topics, sometimes on trading strategies, sometimes on price action analysis, earnings season. Vivian does a lot of technical analysis sessions as well, so you can definitely reach him out also, and he will definitely assist you. And till then, just be safe. Always put your stop losses. I think, Vivian, that is one take to go from all the sessions, that risk management is something which is full of diversification and stop losses. I think there is no shortcut to making money. So as I said in the very beginning, that this session is not going to be about buying Ferraris and buying big houses and finding out tips and tricks of insiders or how to make millions. This is hard work. This is discipline, and of course, risk is a big element which comes with reward. So I think we need to be more aware and try to manage our emotions well. Okay, perfect. So thank you, guys. We'll see you. Thank you, Vivian, once again, and
Thank
I'll
you,
see you
guys.
later after this Fed meeting fiasco. I think we'll meet once again and discuss on what we have talked about today. And definitely, guys, continue to trade safe and take care of yourself. Ramadan Kareem to all of you, and we'll meet you soon.